Tesla Shanghai has delivered over 71,000 vehicles in the month of January, 24% down from last month in December, but 8% up year over year. So that's the good part. And in January, realistically and naturally, vehicle deliveries tend to fall off in every January for all vehicles. It's just a normal pattern of all cars. It's just the nature of, the market. January is not really a good month for any market, generally speaking. So a little over 71,000 vehicles delivered in the month of January. Now we do have some good news, some breaking news. Well, not breaking news, finally news, Finally, we get Berlin reaching 6,000 in capacity. We've been waiting months for this to happen, and now it finally happened while they're shut down for about 2 weeks because of the Red Sea crisis. So it was an interesting time, but they used this time to utilize their equipment, to upgrade their equipment, and to increase their capacity. And that's what they use the time to do it for. And I'm guessing once they go back into production, which would be on February 12th, if I'm not mistaken, then we could probably see a boom in production. So that's going to be flipping awesome. But anyways, in this video, we're going to take a look at what the delivery numbers and production numbers are going to be for all of Q1 and what the stock price would be for Q1 and as well as Q2, Q3, and Q4. So again, if you guys are ready, man, smash that like button, because if you guys ain't, I don't know what y'all are doing. Subscribe if you haven't already. Let's go. So here's my daily production and delivery chart. If you guys are following for some time, then this is very familiar to you guys, and it's also available on Patreon. You guys can check out over here as well. But I use this chart to figure out what the delivery and production numbers are going to be. Mainly deliveries, because production numbers doesn't come out until later. Delivery is more important here. But I use this to determine what the vehicle deliveries are going to be for each quarter, and use that to see what the revenue and profits are, and see what, based on those, what the stock price is going to be. And that's exactly what we're going to be doing in this video as well. So in January, they did almost 71,500 in vehicle deliveries. Production should be closer to 85,000 or maybe even 90,000, because December was a record for Tesla Shanghai, over 90,000 vehicle in production, which is insane. But in February, they do have about 7 days off or 8 days off because of lunar holiday, and it looks like Tesla Shanghai will not be producing anything. Whether they do or not, I'm going to take the worst case scenario and be conservative and say those 8 days, Tesla Shanghai is not going to be producing any vehicles. I'm going to keep it at that, and I'm going to put 3,000 vehicle production, because they're hitting record. Shanghai is hitting record numbers right now, and if we do 3,000 multiplied by 21 days, that's about 63,000 vehicles being produced in the month of February. In March, there's no days off for them. 31 days straight of 3,000 vehicles being produced every day. That'll be 93,000 vehicle production. That's insane. Overall, a total of 156,000 vehicles being produced in February and March together. Now, if we want to add January as well, I think this will be closer to 230,000, but we don't have that number yet. So we're going to continue the way we are. Fremont, in all of 2023, they produced 560,000 vehicles. They have room till 650,000 vehicles. So I'm guessing why they haven't gone to full capacity yet was because they're doing some upgrades. Maybe there's some days off here and there, some lag time, some parts coming in and that. So those are natural things. But nonetheless, in January, there's 2 days off in California or in the US because of New Year's and another thing that's going on in January. And 1,700 vehicles being produced daily is the average. That comes down to just below 50,000 vehicles being produced. In February, they're off for 1 day, same thing. 47,600 vehicles being produced. In March, no days off apparently. There's no special holidays or anything. And 1,700 vehicles there. We get almost 53,000 vehicles being produced. That is a total production of almost 150,000 vehicles produced coming from Fremont alone. Berlin, again, finally, they reached 6,000 vehicles daily, the capacity. But in Q4 of 2023, they weren't doing so good. I think they were down about 30-40% in their production capacity, which was quite a shocker to me when I was doing my estimates. Because in January, we haven't reached a 6,000 yet, and Q4 or December of 2023 wasn't that high of a capacity, I did take it to consideration here, them producing 600 vehicles daily. That comes down to about 4,200 vehicles being produced daily. So they weren't even reaching, even in this January, they're not even reaching their 5,000 weekly capacity. But I did 600 vehicles multiplied by 27 days because they do have like 3 days off in Berlin. That will give us just a little bit over 16,000 vehicles being produced. In February, I increased it to 700 vehicles being produced daily, but only for 18 days because they are shut down 11 days in February. And in January, those 3 days that are off, well, that's because the factory is shut down. So we multiply 700 by 18 days, we get just below 13,000. And in March, 800 vehicles being produced daily. Now we need 815 to reach 6,000 capacity weekly. But I'm going to say that because they're coming back online, it's going to take some time for them to hit that capacity mark. Maybe in April they will hit that. So that's why I put 800, multiply that by 31 days because there's no days off in Berlin. That's about almost just below 25,000 vehicles being produced in March, which is a record, I believe. And that's about almost 54,000 vehicles being produced in all of Berlin. In Texas, again, we are having a little bit of a slowdown as well, and that's because of the upgrade to and making room and space and building the capacity for the Cybertruck, because I mean, when you have 2 million pre-orders, that should be a priority, right? So I put here 650 vehicles for 28 days because they had 2 or 3 days off. That's about over 18,000 vehicles being produced. In February, 675 vehicles being produced, multiplied by 28 days, 1 day off in February. That's about just below 19,000 vehicles. And in March, 700 vehicles multiplied by 30 days because there is 1 day off in Texas. And that's about 21,000 vehicles being produced. Overall, Texas in Q1 will be producing just over 58,000 vehicles, which would be insane. First time, going over Berlin. That's because they were down for 2 weeks. But I don't see this happening in the long term. I do think Berlin is going to be much faster and quicker in Texas, at least in the short to medium term. And then I do think Texas will be a Goliath, producing more than Berlin in overall. Total production, if we add all of it except for January of Shanghai, we get 417,000 vehicles. If we want to add January's, the estimated number that I think will be 80,000, that will be just below 500,000 of like 497,000. So that will be a really, really a sheesh moment, but that's not going to be happening. 98% delivery rate, because that's what happened in Q4, and that would be around 400 and just below 409,000 vehicles being delivered. If we add the January Shanghai, that is a delivery rate of 481,401 vehicles being produced. So for Q1, that's a bit lower than Q4. However, though, we had 14 days off for Berlin. If we didn't have 14 days, it would be easily at the 500s, very easily in the 500s. But because of Berlin being closed for 14 days, and usually Q1 and Q4, they match in deliveries as well around the same time. I mean, every single year this is the case. If we look back in 2023, 2022, all the same thing. But this is not a bad number, guys. 480,000 vehicles, and you have Berlin closed for 2 days. I mean, if we do increase this to, 14 days? I know in February there's 29 days right now, but I want to make up for January as well. Let's just put 30 days just to be conservative. I know that's 12 days, but still. Then that would be like almost 490,000 vehicles. So that is a sheesh moment right there. But 480,401 vehicles deliveries in Q1 of 2024. We'll obviously come back and revise this once we have February numbers for Shanghai, but let's move on with this. So now that we figured out what the delivery rate and delivery numbers are going to be for Q1 of 2024, it's time to put it in the Tesla stock price prediction chart to see what the revenues and profits are going to be, as well as the stock price. If you guys are ready, then smash that like button, man, because I know it's not smashed. Come on, let's go. Again, guys, if you're a regular viewer of this channel, then you guys know exactly what this chart is. It's exactly what you see in the income statement, but formulated, which is flipping awesome. And yes, this is available on Patreon. You guys can check over here. So Q1 of 2024. Let's go through the gist of it because we are in a new year. And I did adjust some numbers to see what I think will happen in this year. Average selling price. I do think in Q1 is going to go below than Q4 of 2023 because we did do some price cuts, but we do have the Cybertruck ramping, which that is an average selling price of 75, 80,000, maybe even 90,000 and plus. Nonetheless, it does have an impact when you do reduce the high volume vehicles. I brought it down just about 0.25 to 42.25. In Q2, however, 42.5, I increased it because I do see the Cybertruck ramping up slowly but surely. In Q3, we get a massive jump to 43,000, and in Q4, 43,500, all thanks to the Cybertruck. I could see by end of Q4, or by Q4, the average selling price for total would be above 45,000 because of the Cybertruck. But we'll have to wait and see what will happen in Q1 and Q2 with the Cybertruck. When it comes to the credits, I left it 450 for the whole entire quarter, for the whole entire year, to stay conservative. Could be more, could be less. Credit is one of those things that it's really hard to predict what's going to be. Services are always on an incline, so that's going to be an incline. Leasing is on an incline, but slowly. In Q3 and onwards, I went crazy because I do think we're going to have interest rate cuts, and that's going to really help people lease vehicles and come and finance it. So that's going to be really good. 16.8% when it comes to the vehicle gross profits in Q1. I do believe that since COGS are going lower crazily, I do see the gross profits being pretty high. And this is X credits, by the way, too. Q2 of 17%, Q3 of 17.5%, Q4 of 17.8%. Energy, guys. I do think energy in 2024 is going to be 50%, at least 50% higher than 2023. I have here total overall for the entire year of 2024, just above 9 billion, and profits being a 2x, close to 100% when it comes to profits growth. So that's insane. I know that they are ramping up in Lathford. I mean, they've only done 37% in capacity, which is only about like a little bit over $6 billion. Here I have $9 billion, so another 50% growth. Now, this could be more because we do have Megapack Factory Shanghai with the same capacity of Lathrop coming online by end of Q2 of 2024. And that's where you guys see a big spike in Q3 and Q4. So I do expect, even though we did 14.7 gigawatts of energy from Tesla, I do think we're going to do close to 22 gigawatts in 2024. Some will call me bearish, but I like to keep things conservative. So that's what I think. Operating costs, 2.5 billion in Q1, 2.7 almost, 2.8, and a little bit over 3, concluding 11 billion compared to their 10 billion that they had estimated in their Q4 earnings call. Taxes and other stuff, which would be interests, kept it 250 every single quarter to stay conservative. Stock-based compensation, 500 million every single year. Now, I do think it's probably going to be maybe 2.2 billion at the end, but keeping it 2 billion, which is 4 or 5 millions, to stay conservative. Shares outstanding here is being diluted as usual. We don't have any buybacks or anything, so that's going to be expected as well. So let's go see what the revenue and the stock price would be. First, the revenue and stuff would be for Q1 of 2024. Again, if you guys are ready, man, smash that like button, man. Let's go. So the vehicle deliveries that we had in Q1 of 2024 was 480 and 401, and bam, look at all these numbers come in. I flippin' love it. Total revenue over $25 billion. Income from operations almost reaching $2.1 billion. Operating margin of 8.3%. And look at that, total GAAP gross margin is actually up 18.2% compared to 17.6% of Q4, which is a really good sign, meaning that business is going up. It's on the right trajectory. It's on an upward trajectory. So that is very, very good. We have net income GAAP of $1.8 billion, non-GAAP of $2.3 billion. That will give us an EPS non-GAAP of 67 cents. I think the street right now has it around 68 cents, if I'm not mistaken. So it looks like it's going to be a miss again, but it looks like the street is thinking it's going to be the same number, the same delivery numbers as Q4 of 484,000, which would be 68. But we have to wait and see. Most likely they are going to be right, but we have to see how February comes along, and maybe Texas will hit 6,000 as well. And if they do, then it's a guaranteed it's going to be the same or more of deliveries than Q4. So that is good news. Total EPS here, GAAP, is around $4.19 because that takes the previous 4 quarters, including this one. And that's what we're going to go based on to figure out what the stock price is going to be. Now, right now, the stock price is around 180 bucks per share. That's a PE of, I believe, around 43. Yeah, it wasn't 40, 43 of 180. Now, if the FUD continues with all the Elon stuff and all that crazy stuff, then we can probably see PE going as low as 40, maybe as low as 35, but it's hard to see it go even lower than that. Rumors are out there for it to go less than 140. That would be a PE of like 33. Some are saying going back to 100, which that would mean a PE of 24. Tesla going to be at a 24 PE. Yeah, that's a bit strange to me. I'm going to keep it around like 40 PE, or let's just keep it at around like 43 PE. So that's where we are right now. 43 PE, 180 bucks per share, and a market cap of 576 billion. In the bull side, 50 PE, I can see going back to 209, but there has to be some sort of a good reason for it to go up there. But I think around 43, maybe even, again, 40 PE around there, it could go down that low. I can see it. So let's put it at 40 PE. Let's put it at that, all right? To stay conservative. In Q2, I do believe they're going to deliver around 525,000 vehicles. And look at that. Total GAAP gross margin stays the same. So that is not good, or that's not even bad at all. We have the operating margin of 8.6%. We have revenue for the whole entire quarter of Q2 almost reaching $27.7 billion, net income GAAP almost $2.4 billion, and non-GAAP of almost $2.9 billion, 82 EPS. So that is a sheesh moment. EPS is going lower as well for the past 4 quarters, which is not good, which we would need a higher PE to sustain the stock price. So that would mean we need the stock price around 43 or 42 to give it around the same, to give it the exact same number. So 2 PE extra. But in Q2, I do expect, Q2 will be sometime in July. That's when it will come out. That's when I do think that interest rate cuts will come in. And this will be very bullish for companies like Tesla and other interest rate sensitive stocks. So I could see the stock price going to 45, maybe even reaching 50, just below 200 because of this news by itself. Now, in Q3 of 2024, I'm going to say 550,000 vehicles. Now, I know some of you guys will go like, no, in Q4 it should be closer to 570, right? But I like to keep things conservative. They did say that this year, Tesla did say that this year they're going to be notably less in growth rate. So 15 to 20% is what I'm thinking. So 550,000 vehicle deliveries, that will give us total GAAP gross margin of 18.5%, which is really good. We have an operating margin of 9.1%, which is extremely good. We have the revenue reaching almost 30 billion, which is amazing. We have GAAP net income of over $2.7 billion and non-GAAP over $3.2 billion. That is really good. 91 cents when it comes to the non-GAAP, which I think that's pretty good. And we are up in EPS. That's really good. We are up in EPS for the entire 4 quarters. And if we do have the news, which I'm pretty sure that's October 21st, guys, October 21st, we have to have some sort of an interest rate cut then. Like we have to, even though if it's 0.25%, 2.5%, whatever it is, this will help. And I do think if you give it a 50 PE, that would go above 200 bucks per share. And that could be the case. Best case scenario, maybe 55 PE, 60 at most, around 250s. Worst case scenario, if there is an actual recession, maybe a 40 PE, 35 PE around there would make sense. But 50 PE, I'm going to keep it at 211 bucks per share. Sheesh moment, all right? Q4, last quarter of the year, I'm going to say 575,000. Now, I do think this is closer to maybe 590, but keeping it conservative, and it's too early to see what Q4 is going to be at the moment. We're going to say around, look at that, total GAAP gross margin of 18.7%, operating margin of 9.2%, over $32 billion in revenue for the first time ever. So that is really good. Net income GAAP of almost reaching $3 billion, $3.5 billion for non-GAAP, and that's an EPS of 99 cents, which is really interesting. But look at the EPS for the past 4 years, goes down to $2.80. So why is that? Because if you guys saw what happened in Q4 of 2023 is that they had about $5.9 billion in tax harvesting that they added. If they did the same thing here in Q4, then I could probably see the EPS being closer to $5. But if they don't, we can see a massive drop down in EPS. That would mean the PE will be jumped up to justify for the stock price, meaning around a 75 PE. That would make sense. But again, if things are getting better, if they actually do 590,000 vehicles instead of 575,000 in vehicle deliveries, and interest rate cuts keep going lower, and we do see demand coming in, there is news with the compact car, maybe the bot or whatever it is, maybe the PE could go as high as 100, around 280. That's all I'm saying. My price target for this year, 2024, and I do think it's far-fetched to be honest, is around 350 bucks per share or 125 PE, which is, when you look at it now, it looks just ridiculous, but it's heavily based on interest rate cuts. and other macro environments, not based on what the company is doing. The company is going to bottom. I mean, they've already bottomed margins and all that kind of stuff. So it's up from here. But is it justifiable to give it a $350 per share by end of the year with all this? I think not adding in the macro environment getting better would be silly. And that's where majority of my estimates coming from for 350. Let's see. I do think it is far-fetched again, but I'm gonna give it 100 PE as the max what could happen by end of the year. The worst case scenario is keeping it at 50 PE of 140, maybe even 150 around there. But I'm gonna keep it at 100 PE because I am very optimistic and conservative in a way. So that's what I think what could happen every single quarter for 2024. But for Q1, it looks like they're going to do over 480,000 vehicle in deliveries. This looks like it's a certain thing, and I am certain about it. And I do think it's going to be the same as Q4, but we'll see what happens as we keep going on. Again, if Texas comes out and says that we reached 6,000 production, that's it. Guaranteed it's going to be at least 484,000, same as Q4, which is going to be insane. But you know what, guys? These quarterly reports are awesome to track. They're fun to track. I find a pleasure doing it. But it doesn't matter what's going to happen. I mean, it does not matter what happens this quarter, next quarter. What matters is in the long term, which is 5 years from now or 6 years from now and by 2030. And here is my Tesla stock price prediction up until now to 2030, and you guys will see how these numbers don't even matter. They just won't matter. Check it out. You won't be disappointed. Guys, get your I bought the dip t-shirt. I'm wearing one right now because in 5 years time we're gonna say I bought the dip. So this t-shirt is gonna be flipping awesome. Subscribe, and I shall see you guys in the next video. See ya.